Hello, everyone. Welcome back, traders. Good morning to you. How are you all doing today? And trust you are doing very, very well out there. Let's confirm that we are good to go this morning. So if you can see my screen and you can hear my voice clearly without distortion, please let me know that things are going well by typing hi in the comment section so that we can get this started. So I would like to see some feedbacks in the comments. Okay, trying to load up my comment section. And what do we have here? Aki 887127236 Good morning to you all. Disciplines, salutes to you too. Good morning to you. Thank you very much. Okay, hey Carrie, how are you doing? Thank you very much. Thank you. So let's take this as a confirmation that we are good to go this morning. My name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host, where we shall be delving into an exciting but insightful analysis of the handful of financial instruments on our watch list for this week. So for this week, we have been reviewing the XAUUSD, the GBPUSD, the USOILSPOT, and of course the USTech100. So we are going to be going through all this from a comprehensive price action based technical analysis as we explore the recent movements and chart patterns of this instrument. And we are also going to be uncovering key insights that can potentially shape our trading decisions for today. And for those who are joining us for the first time, you are highly welcome. And what we simply do here is to come together as a community on a daily basis, gathering in anticipation of both the New York trading session. And during this time, we are going to be reviewing and managing our current positions, while we also aim at positioning ourselves strategically for today's trading session. So we do this on a daily basis, 10 a.m. UTC, 11 a.m. West African time. So it's important that you stay with us, be with us through the session, and continue to join us on a daily basis so that with time you get to understand how this works and you will be able to make your independent decision using the information you have gathered here. So with that being said, we are going to be diving into the economic calendar, as you always know we do, to check into what has really been going on and what we expect to see based on what we witnessed during the FOMC meeting yesterday. And we all know how important checking the economic calendar is. These fundamental factors often manifest on the chart in technical patterns and price movements. And by monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns. And yesterday we had a very, very high impact eventful day, as we have a series of events that came in yesterday: the interest rate decision, monetary policy statement, FOMC economic projection, interest rate projection, and of course the FOMC press conference. And we got to realize that there was no interest rate change, and as a result of this, we had some volatility in the market, which gave us some profits too as well. We are going to be looking into details on that one. And for today, Thursday, June 15th, we have two high impact events coming in from the US economic docket, and these are the retail sales month on month for the month of May. And the retail sales is usually released by the US Census Bureau, and it measures the total number of receipts of retail stores. So monthly percentage changes reflect the rate of changes in such sales, And generally speaking, a high reading is seen as positive for the US dollar, while a low reading is seen as negative. And for the month of April, the data came in at 0.4%, and we have a consensus projection of minus 0.1% for the month of May. So we are going to be looking forward to see what the actual data is going to be like. We're going to see it coming as expected, below expectation, or even beyond expectation. Then we also have the Retail Sales Control Group, which is also published by the U.S. Census Bureau, and it represents the total industry sales that are used to prepare the estimate of PCE for most goods. The previous data here is 0.7, and we have a general consensus projecting 0.0% for today. So the general idea here is that there is a little bit of contraction as regards to sales in the US economy. So we are going to be looking forward to what the actual data too is going to be like on this one. And one thing for sure we are going to be doing here is to try to sniff out the psychology behind price movement, and also identify technical patterns that we want to use to position ourselves ahead of these events. So these events are coming up in about 2 hours from now. So we want to anticipate that and put that into consideration while we monitor and review the current market structure. So with that being said, here we are going to be diving right into the business for today. And as usual, our first commodity for today is going to be the US oil spot. On the US oil spot, we had an interesting situation here yesterday, prior to the FOMC meeting. And so let's run through how the week started for us here on the US oil spot. So at the beginning of the week, we saw here how price action was caught within a range, just within the $70.10 level and the $69.30 level. And this gave us a simple flat channel to work with for the week. And you know how we do it whenever we have this kind of simple flat channel. We want to wait for price action, wait patiently for price action to give us a signal to either buy or sell, which normally comes in the form of either a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And at the beginning of the week, we saw our price action broke down the support line here at the $69.30 level to give us a signal that we might likely be going bearish for this week. And in order to help us guide our trading opportunities, we identified a trend line which has been holding since last week Thursday, and when we connected a series of lower highs, we had a trend line to work with as well. And during the live session, we acknowledged that we want to see price action come back to retest the trend line to give us an opportunity to sell, and we saw what happened. Price came back, retested the structure, and with a sell stop order below the $68.63 level, we had our first sell position for the week triggered. And since that moment, we rode the move all the way to the downside, where it hit our TP target, giving us about 170 pips in profit on that one. And we also had the privilege of adding more positions at the breakdown of the $67.80 level, which also gave us about 95 pips in profit. So at the beginning of the week, we've already scooped over 250 pips, so we were already profitable on the US oil spot at the beginning of the week. Then on Tuesday, we had a simple situation here where we identified that sellers were finding it difficult to break through the $67 area that was around this area. So as a result of this, we identified that area as our new demand zone. We saw a rejection here. Sellers found it difficult to break through. The same thing also happened again. And at this point, we decided that we are going to be looking out for buying opportunities. And in addition to that demand zone, we connected the series of higher lows, which gave us a trend line that we were supposed to use to guide our trading activity on Tuesday. And one thing we said here on Tuesday is that we are going to be waiting for a breakout retest of the $67.80 level to confirm the potency of this bullish move. And since then, we have been in a buy position. And if you look at what happened in the last 48 hours, we saw our price action move over 280 pips in our favor since the breakout of the $67.80 level. And we also had the privilege of maximizing the potential of that move by adding more position at the breakout of the $68.63 level, and price action moved over 200 pips since that moment. So it was quite a profitable week, at least for the first half of this week, as we never had any stop losses at all. Price action just continued to find higher highs. And during our live session yesterday, we were around this point here where we witnessed this old consolidation phase where price action was ranging between the $70.65 level, that is this area here, was the resistant line, and then we had the $70.10 level where price action was finding support at. So one thing we agreed here yesterday is that we are going to be having a buy stop order above the $70.65 to join a bullish move if price action breaks out of that structure, and if price action breaks down the support line at the $70.10 level, we are going to be having a sell position triggered. And as you can see, we saw sell position triggered, and I told us all yesterday that depending on how price action reacts to the $69.30 level will determine if we are going to be adding more sell position or getting ready for another bullish move. But as you can see, we saw how price action broke down the $69.30 level, retested it a couple of times to incite another wave of bearish momentum. So it was another profitable sell position for us yesterday, as we saw on this first position, price action moved close to 200 pips on the first one, and price action also moved about 100 pips on the second position. So we had a roughly of 300 pips on that one, and I do hope that you moved your stop losses accordingly. Like we always emphasize here in this community, that whenever price action moves significantly well in our favor, we want to be moving all stop losses to secure the position. And if you had done that appropriately, you would have been taken out at this point with some profit, maybe roughly about 200 pips thereabout, depending on where you placed your stop loss. Now, congrats to everyone who has been part of the profitable journey so far this week on the USOILSPOT. Now that we're heading into the New York session today, what is going to be our plans, and how do we intend to take advantage of any potential trading opportunity during the New York session today? Well, one thing we have observed here since the beginning of the week was that price action was looking more of a bullish following the bearish move on Monday. We had a trend line to emphasize that after connecting the series of higher lows. And you know how we use our trend lines. As long as price action remains above the trend line, we want to feel comfortable in the buy position and look out for more opportunities to buy. But one thing we've observed here during the New York session yesterday was the fact that the trend line was finally broken, which happens to be the first time price action would break down that trend line during the course of this week. Now, the question to ask at this juncture is that the breakdown of this trend line, will it turn out to be a true breakdown or a false breakdown? And if we look at things from a technical standpoint, we expect that when price action breaks down of a key structure, just like this trend line that was broken, we expect that one point in time, price action will come back, retest that structure to incite a trend continuation to the downside. And with the look of things right now, price action is gradually moving closer to that zone. So we have the trend line here. So the question now is, will price action come back to retest the trend line to incite a bearish move to the downside, or will price action break above the trend line to come back to dictate the bullish pace in this market? So in order to help us guide our trading activity today, I was able to identify a simple setup that I think we can use to guide our trading activity going forward. And the first thing I did here this morning, while trying to decipher what is really going on from a psychological perspective, I understood here that sellers were finding it difficult to break through the $68 level. We saw what happened here during the later part of the New York session, where buyers negated the attempt by the sellers to break through. We also saw the same thing happen during the early hours of today to give us a signal that we might likely be having a new demand zone for the second half of the week. And with an engulfing bullish candle springing out from the structure, it appears price action gradually transitioned into what looked like a reversal pattern in the form of a double bottom structure. Now, if we look at this structure closely, considering the impulsive move that started yesterday, you will see what it looks like now. Price tested it, came back into the $68.60 level, then came back again. Price was unable to break down below the previous low. We saw an engulfing bullish candle bringing price back into the structure. Now, if you look at this, it's looking more like a double bottom structure. And whenever we start identify the potential that price action is transitioning into a double bottom structure, the next thing we want to be doing is to identify the neckline of the structure, which we are going to be using to validate the potency and confirm that this is a true reversal pattern. So the next thing we want to do is to identify the neckline, which coincidentally is situated along the $68.60 level. And with this kind of situation here, what we are waiting for is a breakout retest of this neckline to give us the confirmation that we now have a reversal pattern. So this morning I had a buy stop order above that $68.60 level with the hopes that I will be joining a bullish move. And as you can see, the buy position has been triggered and price action is currently running with about 20 pips in profit. So at this point in time, we continue to monitor how price action will be reacting to this level. And one thing for sure here is that price action has been within a range since the New York session yesterday to emphasize the level of indecision in this market. But one thing is quite clear here is that sellers are finding it difficult to break through the structure. And at this point, I want to be looking out for more opportunities to buy the US All Spot for today. So if you are taking advantage of this buy position, well done to you for being on standby to catch that one. Let's see how far this momentum is going to go. And if you had missed out on that opportunity, well, let's see if the market will present us with another chance to maximize this move. Now, since we already have a breakout of the neckline, and there is still a chance that price goes to come back to retest the $68.60 level at one point in time to help us be part of this move. So if you had missed out, you want to wait patiently for new structures to mature, which one of them is price coming back to retest the $68.60 level before another wave of bullish momentum will happen. So that is one way to join this if you had missed out on that first position. Now, secondly, we have another level at the $68.28 level, a level which has also been a major determinant of price action in the last 24 hours. So if price does not come back to retest that structure, then we want to be having a buy stop order above the $69.28 level to be part of another opportunity to buy. Now, with the situation we have here, we might want to wait for something like this to join, and then if price continues to go to the upside, then a breakout of the $70.50 level will also welcome more opportunities to maximize this move. So that is how we are going to be looking out for buying opportunities for today. So this means that as long as price action remains above that $68 level, we shall feel comfortable in our buy position while we also look out for more opportunities to maximize this move. Now, in as much as we're looking out for buy position here, you know how we do it in this community. We don't want to be fixated on one idea. We want to keep our options as open as possible, and as a result of this, we want to also take into consideration the potentials that the sellers have in this market. And if we consider the impulsive move yesterday that broke through that ascending trend line that we identified at the beginning of the week, it is very reasonable of us to consider selling opportunity as well. So what do we want to see on this chart that will make us to sell the US All Spot for today? Well, personally, I would rather see price action take out all the buy positions along the $68 area, which you can see here has been negating all sellers' attempt, hereby revealing the strength of the buyers around that area. So for me to sell for today, I want to see price action break through the structure. Then at this point, I scale down into my lower time frame to look out for further confirmation that sellers are still strong in the market, like a retest of structure to be able to join the trend continuation to the downside. So that is how we are going to be selling the US oil spot for today. So we are waiting for the breakdown retest of the $68 level. Now, to further make things a little bit more easy for us today, we want to identify a trend line which we are going to be using to guide our trading activity. And if you look at what has been happening since the early hours of today, you will see how price action has found higher lows in this market. This is the lowest point price action has been for this week. That is the $68 level. And we also had a higher low here around the $68.30 area. So at this point, we have higher lows. So what we are going to be doing now is to bring out our line chart, connect the series of higher lows so that we can have a new trend line that we shall be using to guide our trading activity for today. And what this simply means is that as long as price action remains above this trend line, we shall feel comfortable in our buy positions while we also look out for more opportunities to buy. But if at any point in time we see price action break through this trend line to the downside, then at this point we can start considering selling the US oil spot. But one thing for sure here is that we are not getting too excited. We are not having a sell stop order at this point, as we need some further confirmation to happen before joining or thinking of selling. So for us to sell at this point, we will scale down into our lower time frame after price action break through the trend line. Then look out for structures that like reversal patterns or signs that sellers are negating all attempt by the buyers to break back above the trend line. Then at this point, we want to start considering selling. Then we'll have a sell stop order below the $68 area to maximize that move all the way to the downside. So this is the only reason, this is the only way we shall be thinking of selling, only if price action break through this trend line that we have here. So let's be on standby to catch any of these opportunities. So let's see how things plays out from this current structure, and mark this out on your chart. Have your trend line marked out, have your $69.28 level marked out on your chart, and also the $68.60 area, which a retest of that structure will be welcoming more opportunities to buy the US oil spot today. So that is that on the US oil spot. If you have any questions whatsoever, feel free to let me know in the comment section. And for those who want to screenshot my screen, you might want to screenshot it right now so that you can use it as a reference point when you're about to make your independent decision. So with that being said, here I will continue to check the comment section to see if there are any questions while I move on to the next instrument. So the next instrument on our watch list is the USTech100. So on the USTech100, since the beginning of this week, we have been bullish. We have been buying this option, and look at how the week started for us here. So we had a situation here at the beginning of the week where price action was initially ranging between the 14,595 level and the 14,545 level to give us an insight into the level of indecision that was in this market at the beginning of the week. And in fact, it gave us a simple setup to work with. As you all know, when price action is caught within a range like this, we wait patiently for a signal to come, which always comes in the form of either a breakdown of the support line of the channel to give us an opportunity to sell, or the breakout of the resistance line to give us an opportunity to buy. And the later was what happened, as we saw how price action broke out, retest the resistance line to give us the privilege of having our first buy position for the week. And we continue to ride that move all the way to the upside. In fact, we also maximize the potentials of that move by adding more positions at the breakout of the 14,670. And if you look at what we have here since the beginning of the week, price action moved over 450 pips in our favor on the first position and moved over 350 pips on the second position. Though we had some volatility during the course of Tuesday's trading session, I think that was as a result of the CPI data, where we were taking out of all buy positions here on Tuesday. Okay, Wednesday, that was yesterday. We were taking out of all those positions yesterday. But one thing I told us here is that we still remain positive on buying if price action remains above the 14,950. So if you are taking advantage of these opportunities we had here, well done to you for being on standby to catch these moves. And by now, you should be out of all trades right now. So at this point in time, we are going to be projecting what our expectation is going to be like for today. Now, looking at this current market structure here and going to as far back as when is that? As far back as last week, Thursday, exactly a week now, you will see how price action has been on a very bullish move. And in fact, we had consistent higher lows, which was respected and connected to give us that trend line that we have been using to guide our trading activity since the beginning of this week. Now, one thing we have observed here during the early hours of today is the fact that price action appeared to have broken down that trend line, which happens to be the first time price action will be breaking down that trend line since the beginning in the last 1 week. And for us, this is a sign that we might likely be seeing a bearish momentum anytime soon, since we already have a breakdown of both the trend line and the 14,950. Now, I also had a couple of trend lines here, so I want to project this trend line here, so that it can capture this low here. So this one here will now be the temporary trend line. I want to make this one a little bit thinner than the previous one. So we have the major one, which is a thicker line on your screen, and we have the other one, which is a thinner one here. So price still remains above this trend line, so it's still looking very bullish unless we have a breakthrough of the structure. Now that we are going into the New York session today, how do we intend to trade the USTech100? Now, one thing I would like to first of all acknowledge here is that as soon as price action got into that $15,050 area, a strong psychological level, we saw selling pressure resume from that area. So I want to label this area for the sake of clarity so that we can have a visual representation of what we are talking about here. So since price got into this point, that is the highest point price action has been this week, we saw sharp rejections, and since then price action has been finding lower highs in this market. And you know what we do whenever we start spotting lower highs, we want to connect it and use it to guide our trading activity for today. So I have lower highs figured out right now, and I would like to give this a red color to emphasize bearish. And we are going to be using this trend line to guide our trading activity today. So what this simply means is that as long as price action remains below this trend line, we shall feel comfortable in a sell position, while we also look out for more opportunities to maximize the bearish move. And for those who had actually joined this bearish move at the breakdown of the 14,950, well done to you for being on standby to catch that move. And if you are still in a sell position right now, it is advisable that you move your stop losses to your entry point. Anywhere around the 14,950 or above this level seems most appropriate to move your stop loss. As you all know, we want to give room for price action to breathe. But if you are yet to be in the position right here, well, it's okay. We still think there are still more opportunities to be part of the move. And we have a level here at the 14,885, where a breakdown retest of that structure will be welcoming an opportunity to sell the USTech100. So let me label this quickly, and then we shall talk about this extensively. So we have the 14,885, which also shares a beautiful confluence with that bullish trend line that has been supporting the bullish momentum since last week, Thursday. So if price action breaches this trend line, it would have broken down the 14,885 to further emphasize the strength of the sellers at this point, where a retest of structure of this bullish trend line or this bearish trend line here will further confirm the strength of the sellers. Then we could add more positions to the downside. So as long as price action remains below this bearish trend line, we shall feel comfortable in our sell position. So I also want us to take note that there is still a likelihood that price action could fight some buy pressure around this area. Don't let us get carried away that this might likely be a bullish momentum. It might not be, because price could still come back to retest the 14,950, which shares a confluence with the bearish trend line, to incite a bearish move. The only reason why we are going to be buying the USTech100 today is if price action breaks out of this bearish trend line, which also shares a confluence with the 14,950. That is the only reason to look out for buying opportunities in this market. So to buy here, I want to see price break out, take out the bearish trend line, then retest the structure, which also lines up with the bullish trend line. Continue buy pressure on our lower time frame will confirm the strength of the buyers, after which we can join a bullish move to the upside. Then we could add more positions if price action goes on to break out, retest the $15,050 level. So that is how we are going to be trading the USTech100. So we have a trend line to guide our bearish move for today. So this is the trend line here. So as long as price remains below the trend line, we look out for structures and patterns that support a bearish momentum. And if price action breaks above and retests the 14,950, then at this point the bearish move here will be negated, and we'll look out for opportunities to buy the USTech100. So I would love that you mark these levels out on your chart so that you can use it as a reference point when you're about to make your independent decision. And you might also want to screenshot my screen in that regard too as well. So that is my view here on the USTech100. I hope I made myself clear. And if you have questions and need further clarifications, feel free to let me know in the comment section. And trust me, I am here to be of help in that regard. I can see Cast. Good morning, Cast. How are you doing today? 663. Good morning to you. Ook 140271. Thank you very much. Good morning. All right. So in the absence of no questions, I want to assume that we are on the same page. If you still have questions, you can still drop it in the comment section. I will respond to them in due time. So with that being said, here we are going to be moving on to the next instrument. I've forgotten how we followed through these levels yesterday. So I want to look out for the sequence. So give me a moment. Let's look at the sequence of these instruments for the week. Give me a moment, please. Okay, so it is the XAUUSD next, after which we are going to be treating the USD JPY. So let's move on to the XAUUSD chart. So on the XAUUSD, since the beginning of the week, we have had quite a significant amount of profit on this one, though we had a roller coasters of buys and sells, but it was mainly more of selling the gold commodity this week. And for us to have a clear view into what led into the decision we made at the beginning of the week here, I would like to run through the higher time frame, that is the 4 hours time frame, where we were able to identify a key zone which we said we are going to be using to guide our trading activity for this week. So right now we are on the 4 hours time frame, and this was what we spot at the beginning of the week. The first thing we saw here was our price action has been choppy and leading into a consolidation phase where we saw price action ranging between the 1,985 level and the 1,940 level to give us an insight into the level of indecision in this market. Then in addition to that was this key zone we saw here between the 1,960 and the 1,965, as you can see. And you will see here that in the last 3 weeks, in this 3 to 4 weeks in this market, we saw how that zone has been a major determinant of price action. So if I take you through, you will see here how this level was a demand zone at one point. It was a demand zone here too as well. Then we saw the breakdown retest of structure. We saw a consolidation phase during the last trading day of last month before we saw the breakdown of the structure at the beginning of this week, of this month. And since the beginning of this month, we saw how it was difficult for buyers to break back above this key zone between the 1,960 and the 1,965. And the same thing also extended into last week and the early days of this week here. As you can see, continued selling pressure around that area. And at this point, at the beginning of the week, we were saying here that if we are going to be buying, we want to see price action take out all the sell positions here, breakout retest for us to join a buy opportunity, and that if the continued selling pressure persists, then below the key level at the 1,960 will be an opportunity for us to sell. And if price action goes on to break through this demand zone at the 1,940, we shall be looking out for more opportunities to sell the XAUUSD. And if you look at what happened throughout the course of the week, you will see that price action has majorly been below that key zone throughout the week to emphasize the strength of the sellers in this market. And one interesting thing happened later yesterday. We saw our price action broke down that demand zone for the first time in the last 3 weeks, I think, the 1,940 to signal another bearish momentum. And at this point in time, it is quite reasonable that we look out for selling opportunities as since price action has finally broken down this zone here. So we are going to be talking about that in detail when we scale down into the lower time frame. I just needed us to see what we saw here at the beginning of the week and what led into the decision of selling the XAUUSD this week. So now scaling back into the lower time frame, that is the 1 hour time frame here. Let's see how the week started for us, how we saw opportunities to buy and sell. Now, we saw at the beginning of the week here where price action was initially ranging just right within the zone, but it was within the $1,961.20 level and the $1,954.50 level. And with a flat channel like this, we already had something to work with at the beginning of the week where we will be waiting for either a breakout of the resistance line of the range for an opportunity to buy, or the breakdown of the support line of the range for an opportunity to sell. And what we initially saw at the beginning of the week, this all happened before the beginning of our live session on Monday. We saw the breakout of the resistance line happen. And I told us all here that depending on how price action reacts to the 1,960, which also shares a confluence with that bullish trend line that we identified at the beginning of the week. So this was the bullish trend line I'm talking about here. So we've said here on Monday that as long as price action remains above that bullish trend line, we will be looking out for buying opportunity. But if at any point in time price action breaks through the trend line, then at this point it would have broken down the 1,960 where we already had a sell stop order below that structure to trigger our sell position. And we saw what happened here. Price action broke through the bullish trend line, and at this point we had our first sell position for the week where price action moved over 100 pips. And you all know how we do it. When price action significantly moves in our favor, we want to be moving our stop losses to secure the current position while we wait out for more opportunities. So we saw the bullish pressure come in, take us out of that position with a modest amount of profit on that one. And I told us here on Tuesday that we might likely see a situation where price will come back to retest the trend line to incite another wave of bullish momentum. Of course, this falls in line with our technical expectation. When price action breaks down a key structure, we expect it to come back, retest this key structure to incite another wave of bearish move. And this was exactly what happened, though we had some buy pressure happen during the New York session on Tuesday, which gave us some buy positions. We were taken out of those positions and price action dropped to the downside on Tuesday, giving us another wave of selling opportunities. As you can see here, we had about 200 pips on that first position. We had about over 140 pips on the second position on Tuesday. So we have been quite profitable before the live session yesterday. And during our live session yesterday, this was what we spotted on this chart. So I think I scaled down into the 30 minutes time frame yesterday to identify a simple setup that we are going to be using to guide our trading activity yesterday. And what I made mention here yesterday is that we are going to be using this trend line as our yardstick to guide trading activity. So we had this trend line spotted during our live session yesterday, and this gave us the privilege of buying the XAUUSD at one point. Remember, we bought at this place. We had a buy stop order above the $1,949.50 level, which was triggered during the early hours of the New York session yesterday, giving us this buy position, and about 100 pips moved there before we started seeing some selling pressure around this area. And during my on my public platforms, I shared an update here where we anticipated a sell position prior to the FOMC minutes yesterday, and price action continued to drop to the downside on this one. So it was quite a profitable trade, and I hope you took advantage of the breakdown retest. If you had missed this one here, you must have taken advantage of the breakdown retest of this trend line, which falls along the $1,949.50 level. And if you had done that, you would have closed yesterday with over 200 pips, as we saw price action move significantly well, breaking through that our demand zone at the 1,940 level. So for those who have been part of this profitable journey, well done to you for being on standby to have caught that move. And right now, you must be out of all sell positions. But if you're still in a sell positions right now, I will be advising you to move all stop losses to that area around the 1,940, below the 1,940 level, to secure the current sell position. Now that we are heading into the New York session today, what is going to be our plans and how do we intend to maximize the opportunities in this market? So are we going to be selling for today, or are we going to be getting ready to buy the XAUUSD? Well, I was able to identify a simple setup here while trying to monitor what our next line of action will be after trying to see our participant in this market has been relating to the structure. Now, the first thing I was able to observe here this morning was the fact that as soon as price action got into that zone around the 1,930 level, a very strong psychological area considering the round figure of that price, we saw attempts by the sellers to break through failed at every point in time. And what we saw here was buyers come in strongly to negate all selling attempts. We saw the first one here during the early hours of today. We saw another one happen here during the same early hours of today here, and we saw another one happen here. So we've been beginning to see higher lows. And as a result of this, I identified that zone around the 1,930 and the 1,929 has a demand zone, at least a temporary one in the meantime for today. So now, will this zone be a platform for buying opportunity today? Well, that is a question we want to be answering at this point. Now, besides the demand zone identified there, I was able to identify a level around the 1,934, which has also been a major determinant of price action. And I said here that a breakout of the 1,934 and the breakout of this trend line will be an opportunity for me to buy the XAUUSD today. So we already had a breakout. I had my buy position triggered, and at this point in time, I'm currently running at break even here. But I'm still of the opinion that anywhere above the 1,934 will be an area we shall be looking out for buying opportunities in this market. Then we could see maximize the potential of this bullish momentum if price action goes on to further break out of the 1,937 level, this level here. So I would like to give this a different color to differentiate it from the previous levels we have here. So I will label this one 1,937. So we have this level marked out. You want to mark this level out on your charts too right now, so that you don't miss out on the opportunities if price action breaks through the structure. So now we have like 3 levels to maximize the potential of this bullish move in this market. So we have the 1,934. As long as price action remains above this level, we are buying. And we have the 1,937, and we also have the 1,940, which happens to be the strong demand zone we identified on the higher time frame. Now, depending on how price action reacts to the zone will now determine if the bullish momentum will continue or not. So it is very important that we should know that this is a counter trend opportunity we are taking right here. So as soon as price action gets into these levels, you want to be moving your stop losses to secure your positions while we wait out and see if price will break out, retest these levels for us to add more positions. But as soon as we start seeing certain pressure around that area, this should be a clear sign that we might be in for a trend continuation to the downside. So at this juncture in the market, we cannot ignore the potentials of sellers too as well. And for the fact that price action has broken down that very strong demand zone that we identified on the higher time frame, it is very clear that considering the potentials of sellers at this juncture seems quite reasonable. So what this simply means is that if price gets into this level, let's look out for structures. If we start seeing reversal patterns like double top structure, head and shoulder pattern around that area, it could likely send a crash to the downside. So let's be on standby for that one. And this area too as well, we could see something like that push price to the downside. So in as much as we're looking out for buying opportunities above the 1,934, considering the temporary demand zone we just identified around the 1,930, we cannot ignore the potentials of sellers. And for me personally, for me to sell the XAUUSD today and to feel comfortable selling the XAUUSD today, I want to see price action take out all the buy positions along the 1,930 and the 1,929 level. And if this happens, I want to be getting ready to sell the XAUUSD, while I will be using this trend line as my yardstick to guide my bearish momentum to the downside. So what this simply means is that when price drops below this trend line, we shall feel comfortable in any sell position in this current market structure. So let's see how things plays out going into the New York session the next couple of hours. So we already have key levels that we are going to be using. Most importantly is this 1,934. As long as price remains above that level, we feel comfortable in our buy position. And if price action breaks down this trend line and the 1,929 level, we shall feel comfortable selling the XAUUSD. So you want to mark these levels out on your chart or screenshot my screen if you want to, so that you can use it as a reference point to guide your trading activity for today. So that is my view there on the XAUUSD. If you have any questions whatsoever regarding what I just explained, or you need further clarification into a particular aspect, just let me know in the comment section, and trust me, I am willing to be of help in that regard. So moving on right now to the last instrument for today, which is the is it the US or the GBPUSD? I think it's the GBPUSD. Hold on a second. Let me run through quickly. I don't know why. Okay, it's the GBPUSD. So it's the GBPUSD. So we are going to be treating the GBPUSD, which happens to be the last instrument we are going to be taking for today. So on the GBPUSD, what happened on this instrument at the beginning of this week? So here we are on the GBPUSD. So I have, hold on a second, please. I need to, okay. Hold on a second, please. All right, sorry about the breaking transmission. So I had to sort out some positions I'm running currently in. So on the GBP USD here, we had some buys and sells. It was roller coasters of buys and sell for this week on the GBP USD, and we were lucky enough to be part of both expectations in this market. So at the beginning of the week, we had our key level, which was situated at the 1.259 figured out here. And you know how we use our key levels in this community. As long as price remain above the key level, we look out for structures and patterns that support a bullish momentum, while a price remaining below the key level gives us an opportunity to be thinking of selling. Then in addition to that key level there, we saw a range where price action was caught within, and that is the 1.25850 and the 1.25650 level. And this was what we needed to help us position ourselves ahead of the new week. And we are waiting for either a breakout or breakdown of that range. Then in addition to that range there, we had a trend line which we were using to guide our trading activity at the beginning of the week, and that is this bullish trend line here. And you know how we use our trend lines. When price action remains above the trend line, we feel comfortable in a buy position, but if price action breaks down the trend line, we look out for selling opportunities. And with a sell stop order below this level here, we were privileged to be part of a bearish move at the beginning of the week, and we had the privilege of maximizing this bearish momentum as we added more position, had a breakdown of the 1.25650 and the breakdown of the 1.25400 level. So it was quite a profitable first day of the week for us on the GBP USD. Then on Tuesday, we begin to observe this bullish momentum where price action gradually was climbing to the upside. And for us on Tuesday, we said here that this might likely be a retracement of this impulsive move that, depending on how price action reacts to the key level, will determine if we are going to be selling one more time or buying if price breaks out to retest the key level. And to help us position ourselves for any trading opportunity here on Tuesday, we had a simple setup identified, and that was a range between the 1.25770 and the 1.254540 level. And with this level we identified here, we were looking out for opportunity in the form of either a breakdown to sell or a breakout retest to buy. And in fact, the market gave us an opportunity to buy, so we saw the breakout, and with our buy stop order above that structure, we had our first buy position for the week. And we continue to maximize the bullish move by adding more position at the breakout of our key level. You know, whenever price action breaks out to retest our key level, of course, we want to be looking out for buying opportunities. So we rode the move all the way to the upside, and in fact, we had a trend line which had been supporting that bullish momentum throughout the course of this week. So we had connected a series of higher lows and gave us that trend line, and we agreed here yesterday that as long as price action remains above this trend line, we shall feel comfortable buying the GBPUSD. But following the FOMC data that came in yesterday, we saw how price action broke through that trend line for the first time in the last 1 week, giving us a signal that we might likely be seeing a bearish move. But we are not jumping into conclusion at that point, as it could still turn out to be a false breakdown. And one thing I saw this morning while trying to decipher what our next line of action could be today is the fact that we saw how price action sellers were finding it difficult to break through the 1.26300 level. And despite the fact that we saw a breakdown of the bullish trend line, it is quite clear that sellers were finding it difficult to continue to the downside. And because of the situation here, it was quite clear that the potentials of buyers coming in at this point is very, very likely. So in order to anticipate this, I already placed my buy stop order above the 1.26500 level to capture this bullish move. And if you had done that, well done to you, as we saw price break out, did a retest of the structure, and then price has been climbing to the upside. Then at this point we have about 20 pips in profit at this point. So for those who took advantage of that breakout of the 1.265, well done to you for being on standby. So you want to be moving your stop loss to the entry point to secure this buy position. Now the reason why I have said that we should secure this buy position at this juncture is because of the potentials that sellers could still come in at this point. And why do I say that, and what do I mean by that? Now, if you remember what I said earlier as regards to the breakdown of this bullish trend line, which you saw here, and from a technical standpoint, when price action breaks down a key structure, just like this trend line that was broken here yesterday, there is a likelihood that price could come back, retest that line to incite a bearish move to the downside. So because of this technical expectation here, it is quite reasonable that we move all stop losses, secure this current buy position around your entry point, and let's wait out and see how price action will be reacting to both the trend line here and the 1.26710 area, where depending on what happens here will determine if we are going to be buying, or that is adding more buy position to our existing trade if you are still in the buy position. And if you are not, we want to be looking out for breakout retest to buy the GBPUSD. But if continued selling pressure continues around this area, then at this point we shall be considering selling the GBPUSD. Now we want to look out for structures that will confirm that sellers are gradually gaining momentum. Now with this situation here, so I'm still looking out for more opportunities to buy if price action breaks out, retest the 1.26710 level, and if it continues in such a way that it goes on to break out the 1.27 level, which happens to be the highest point price action has been for this week, then I want to be seeing more opportunities to add to my existing trade. So that is how we are going to be buying the GBPUSD for today. Now, in as much as we are looking out for buying opportunity, we also want to consider the potentials of sellers at this juncture in the market. And if we take into consideration the breakdown of this bullish trend line, which has happened for the first time this week, we might likely see a retest of the structure that would incite a trend continuation to the downside. So now the next thing we want to do now is to see how we can capture that opportunity by trying to marking out levels and structures that we are going to be using to guide our trading activity. So now the first one here is this trend line, which I was able to spot here this morning, and it appears price has broken out of the trend line. Well, it could still turn out to be a false breakout. So I want to mark this level out, which will be guiding my trading activity for this week. That is, if price drops below the trend line, then I want to see it as price back into the seller's territory. Then I will be looking out for opportunities to sell. Now, besides the trend line here is this higher lows we have been noticing here. So I would like to make this a little bit thinner. Then I have it colored green. So we have a trend line. So when we bring out our candle chart, we'll do some little adjustment to this one. So bringing back the candle chart, so I'm doing an adjustment here. So what this means is that if price action drops below this trend line, we want to see some confirmations like selling pressure, that is price finding it difficult to climb above before we could join the bearish move. And if price action goes on to break down the 1.26200 level, we want to see this as a confirmation to add more position to our existing trade, and a breakdown of the 1.259 could welcome more opportunities to sell. Now, one thing I would like to call our attention to is that key level here at the 1.25900 level. Remember, this key level has been our key level for the week. So it depends on how price action reacts to this level that will determine if we are going to be adding more sell position or getting ready for another wave of bullish momentum. So a breakdown of this key level will welcome more opportunities to sell, that is retest of structure to incite another wave of bearish momentum to the downside. But if we see buy pressure resume above the key level, that we continue to see something like a double bottom structure, head and shoulder pattern around that area, then at this point we want to start considering buying the GBPUSD one more time. So this is how we are going to be trading the GBPUSD for this week. If you have any questions, feel free to let me know in the comment section. And I hope you screenshot my screen so that you can use it as a reference point when you're about to make your independent decision on this instrument. So at this point, I want to call it a day here. It has been a wonderful moment with you guys today. And for the newcomers in the house, I hope you are able to gain one or two things from what we discussed here during the live session. And trust me, the more time you spend with us, the more you get to understand how this works, and the more freely you will be able to independently use the information here to make a decision on your portfolio. So with that being said here, I wish you best of luck, and remember that we are anticipating a major event which is coming up in about an hour from now, and that is the retail sales. So ensure that all positions are well secured and wait for structures to mature before you want to open any position in the market. We could likely see some volatility, and we want to always be in the market even before the event happens. So if we have structures mature very well before the event happens, then we are good to enter and hope that price action will move significantly well in our favor. So on this note, I wish you best of luck, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well the instrument we have been monitoring so far this week has been doing, and also get ready for the last trading day of the week. Do have a wonderful evening, everyone. Bye-bye.